What if I told you that the silver price you see every day is not really the price of silver at all? What if the number flashing on your screen represents something very different from the metal people actually hold in their hands? Because right now, the gap between paper silver and physical silver is wider than most investors realize, and that gap explains why prices don't seem to match reality anymore. This isn't hype, and this isn't fear-based talk. This is simply how the system works and why it's starting to strain. Once you understand this, you'll never look at the silver price the same way again. Before we go deeper, if you follow markets, precious metals, and the real shifts happening in money behind the scenes, take 1 second to like this video and subscribe to The Monetary Shift. It helps the channel reach more people who want facts instead of noise, and it keeps you connected to updates like this that actually matter. Now let's continue. On paper, silver looks calm. The price moves up and down a little. Headlines say demand is weak, and analysts argue about charts and resistance levels. But in the real world, physical silver tells a very different story. Dealers report tight inventories. Premiums stay elevated. Large bars are harder to source quickly, and delivery times stretch longer than what we used to consider normal. That disconnect is not accidental, it's structural. Paper silver is essentially a promise. Futures contracts, unallocated accounts, ETFs, and derivatives all fall into this category. These instruments allow traders to buy and sell silver exposure without ever touching an ounce of metal. For decades, the system worked smoothly because most people never asked for delivery. Contracts were rolled over, positions were closed in cash, and confidence held everything together. But paper silver can be created in enormous quantities, far beyond the amount of physical silver that actually exists above ground and available for sale. Physical silver is different. It has to be mined, refined, transported, stored, and delivered. It can't be printed, duplicated, or settled with accounting entries. And when demand rises for real metal, the system feels stressed quickly. That's exactly what we've been seeing. Fresh numbers make this clearer. Over the last few years, global silver demand has consistently outpaced new supply. Industrial demand alone keeps rising, driven by solar panels, electric vehicles, electronics, and energy infrastructure. Unlike gold, most silver is consumed. It doesn't come back to the market easily. At the same time, mine production has struggled to grow. Costs are higher, ore grades are lower, and new projects take many years to develop. Now, here's the key part. Even with this tight physical balance, paper prices can still remain muted in the short term. Why? Because paper markets set the headline price. Large volumes of contracts can be sold in seconds, pushing prices down without a single bar of silver changing hands. This creates the illusion of abundance, even when physical availability says otherwise. Think of it like this. Imagine a housing market where millions of paper houses are traded every day, but very few real homes exist. The paper market could say prices are falling, while people trying to buy an actual house can't find one at a reasonable price. That's where silver is right now. This doesn't mean paper silver is fake. It means it serves a different purpose. Paper markets are great for liquidity, hedging, and short-term trading, but they are a poor reflection of physical stress until that stress becomes impossible to ignore. Historically, the disconnect can last much longer than people expect. Then, when it finally resolves, it tends to do so quickly. Another important point is trust. The paper-silver system relies on confidence that contracts can be settled smoothly. Most of the time, they are settled in cash. That works as long as participants accept cash instead of metal. But when more players start preferring delivery, inventories matter. Warehouse reports, eligible versus registered stocks, and delivery notices suddenly become very relevant. We've already seen moments where delivery volumes spike and inventories drop faster than expected. These are not crashes or failures, but they are signals. They tell us the system is being used more aggressively on the physical side. And when physical demand keeps rising quietly in the background, paper prices can lag reality for extended periods. This is why you might hear someone say silver is cheap, while another person says silver is hard to find. Both statements can be true at the same time. The price reflects paper supply. Availability reflects physical supply. For long-term holders, this distinction matters. Physical silver is not about day-to-day price action. It's about owning something outside the financial system with no counterparty risk. Paper silver is about exposure and speculation. Confusing the two leads to frustration, especially when prices don't behave the way fundamentals suggest they should. And this is where patience comes in. Markets don't move on logic alone. They move on structure, incentives, and timing. The silver market is small compared to most financial markets, which makes it easier to influence in the short term and harder to suppress forever. Structural shortages don't disappear. They build pressure quietly. At the Monetary Shift, we focus on understanding these pressures rather than chasing daily price noise. The goal is not to predict exact dates or prices. The goal is to understand what's real and what's symbolic. Paper silver is symbolic. Physical silver is real. As we move forward, watch the signals that matter. Watch premiums. Watch delivery demand. Watch industrial consumption. Watch how often price drops fail to increase physical availability. These details tell a more honest story than headlines ever will. If this explanation helped clarify why silver prices often feel disconnected from reality, let me know in the comments. I read them, and your questions help shape future updates. And if you think this video would help someone who's confused about silver or stuck watching only the price chart, share it with them. Conversations like this grow stronger when more people understand how the system actually works. Thanks for watching, thanks for supporting The Monetary Shift, and I'll see you in the next update.